What if I told you that the stock market is not gambling? Not magic. And definitely not only for rich people in suits in New York or London. What if I told you the stock market is something you already understand? You just don't call it the stock market. Because if you've ever contributed money to a family business, a transport union, a cooperative society, or a farm project, then congratulations, you already understand the basics of the stock market. Today, we're breaking it all down. No jargon. No confusion. Just how the stock market really works. Welcome to Money Metrics Africa, where we break down money, investing, and wealth building in simple terms anyone can understand. If you want to make smarter money decisions and build long-term financial stability, you're in the right place. Let's start with the most important question: why does the stock market even exist? Imagine you run a small palm oil business. Demand is growing, but you don't have enough money to buy more machines. You have two options. Option 1, borrow money. The bank gives you a loan, and whether your business succeeds or fails, you must pay them back with interest. Option 2, share ownership. You tell people, bring money. Become part owners. If the business grows, we all benefit. That second option is the foundation of the stock market. The stock market exists so businesses can raise money without drowning in debt, and so everyday people can own pieces of growing companies. Now let's talk about the biggest lie people believe about stocks. The lie is this: stocks are gambling. Gambling is when you depend on luck. Stocks are about ownership. When you buy shares in a company, you are not betting on numbers going up and down. You are saying, I believe this business will sell more, serve more people, and earn more money over time. Day traders gamble. Long-term investors own businesses. That difference changes everything. Let's bring this home. Imagine a transport union. 100 drivers contribute money together to buy 10 buses. Each driver owns a portion of the buses. As passengers increase, profits increase, and everyone benefits. No one is guessing. No one is gambling. That's ownership. Or think of a farm cooperative. Members pool money to buy land, seeds, and equipment. At harvest, profits are shared. The stock market works the same way, just on a bigger, more organized scale. This is where many people get confused. When you lend money, you earn interest, but your upside is limited. When you own a business, your upside grows as the business grows. Lenders get paid first. Owners get paid last, but owners build wealth. That's why the wealthy focus on ownership, not just saving or lending. Let's look at real examples. Dangote Group raised money from investors to build cement plants, refineries, and factories. MTN raised capital to expand telecom networks across Africa. Safaricom used shareholder money to scale infrastructure and services like M-Pesa. These companies didn't grow by magic. They grew by allowing people to own a piece of the journey. Now, where does the stock exchange come in? The stock exchange is simply a marketplace. Just like Mile 12 Market, Kariakoo Market, Santon trading floors. Except instead of tomatoes or clothes, people buy and sell shares. In Africa, we have the Nigerian Exchange, NGX, the Johannesburg Stock Exchange, JSE, the Ghana Stock Exchange, GSE. These exchanges don't make you rich. They just provide structure, rules, and transparency. The stock market is not a shortcut to quick money. It's a long-term system that rewards patience, understanding, and ownership. Once you stop seeing stocks as gambling and start seeing them as business ownership, everything changes. And this is just the beginning. In the next video, we'll break down how people actually make money from stocks, dividends, growth, and compounding. If this video helped you, like, subscribe, and share it with someone who still thinks the stock market is gambling. This is Money Metrics Africa. We'll see you in the next one.